Imagine this. You're on vacation. You're in France or Spain, Germany, Costa Rica, Argentina, South Africa, Australia. You're somewhere lovely. Prices are cheap. The sun is shining. A lot of economic activity going on around you. And you walk into a real estate office simply because if you're anything like me, you want to know, how much does real estate cost here? How much is a house? How much is an apartment? What are the taxes? What are the currency implications? How do you buy a house? How do you sell a house? Is there any weird legal stuff I need to know? Today, I bring you Matt Lavin, who's a good friend of mine, and I would say a global leading voice in international real estate. Matt runs a company out of the UK called Benoit Properties. They have a global perspective on real estate. Where are the currency opportunities? Where are the high growth opportunities? Where are the the better vacation style opportunities? Where are the better real high growth, high end, where the wealthy are investing? This is what Matt has been doing for 20 years. He's been connecting investors from all over the world to properties equally all over the world. Now, here in the United States, we all have this vision. Maybe it'd be cool to buy a house overseas, but it's super hard because we don't really have an opportunity to have a one-stop shop for something like that. We have to find an overseas realtor, we have to find our own property managers, we have to find our own legal team, we have to find our own stuff, and it's messy and it's difficult. Well, Matt fixes that problem for overseas investors. Now, a lot of US real estate investors right now are concerned about high interest rates, affordability, high prices. Well, guess what? There's a whole world out there that don't share our concerns, and there's absolute hotspots of amazing investment opportunity, and there are just lifestyle opportunities all over the world. Today we're going to dig into these with Matt, who has been answering these questions for 20 years. If you have ever thought about investing overseas, or you're simply curious about investing overseas, the next hour with Matt Lavin is a voice that you simply don't hear from over here in the United States. So this is refreshing. This is going to be brand new. It's worth every minute of your time. And Matt is an expert. So I so enjoyed this episode, and I hope you do too. All right, everybody, and welcome to a really special episode of Burn Your Boats podcast. Today's episode is something I'm really, really excited about. We've got one of, I would say, globally, one of the most informed international real estate minds that I can point to. And I mean that sincerely. We're talking to Matt Lavin today. Matt has worked, I have known Matt for 19 years. And I have, back in the day when we were both young pups, getting into the real estate world, Matt was a fascinating character then, and he has spent 20 years marketing, sourcing, selling international real estate. So sourcing it from all over the world. And we're going to get into some really, really interesting corners of the international real estate market in the conversation, but also selling it globally. Who's buying it? Why do they buy it? What currencies are they buying it in? How do overseas international investors look at buying investment properties from the origin story? What are they thinking when a Saudi Arabian buys a Canadian property? Like what's even going on there? So without further ado, I welcome Matt Lavin to the show. Matt, welcome to Burn Your Boats.
Yeah, thanks for inviting me on. It's a pleasure to be here. So thank you for the kind words as well. It means a lot.
Matt, you're based in Manchester. What's the weather in Manchester like today?
Well, it's not going to surprise you really. It's cold, it's wet, but that's how we like it.
That's how you do it. You have two of the best football teams. We have two of the best football teams in the world right there. So at least I know your weekend. Yeah, I know your weekends are exciting. Matt, I was over in Manchester last year, and I loved it. I really, really loved it. It was my actual first time to visit
All right.
Manchester. Matt, we know each other a long time. I'm going to get back to how I met you first.
Mhm.
Back into, I'm going to say it was 2007. Real estate market was getting a little bit dicey
Mhm.
all over the world, really.
Mhm.
But it hadn't quite crashed yet, but it was getting dicey. And I
Yeah.
worked at that time for Torcana, my own company. We were selling international real estate in various markets from Lithuania, Latvia, Romania, Germany, Costa Rica, Panama, Argentina. And you were working at that time for one of my deepest competitors, Night Knox.
Yeah.
Matt,
Yeah.
bring your mind, if you can, cast your mind all the way back to 2007. Tell me a little bit about yourself first, like introduce yourself, and then tell me
Sure.
why and how you got into real estate.
Yeah, well, I was curious to get into sales. Always had an interest in property. I was keen to just learn about, how to sell, how to spot trends, get into business, and grow and develop as an entrepreneur fundamentally. And I knew like salesmanship was going to be a big factor in that. So I moved from, graduated from university doing like a science-based degree, and then just started local estate agency that happened to have an international division upstairs. So, it landed favorably for me. I was able to, begin selling international real estate, and I came into the real estate industry in 2008, just January the 1st, 2008. I did some sales training. And then off I went on the phone, no knowledge really, just trying to learn as I went and picking up bits of information as I went. And just managed to get kind of like my feet under the table really and managed to carve out like a sort of consistent understanding of what I was doing when Lehman Brothers collapsed. And, I was sat on holiday with my now wife in Gran Canaria, and you read looking at the news and suddenly Lehman Brothers collapsed. I didn't quite understand the magnitude of that. And immediately then, the back end fell out of the global real estate market. At the time, I didn't really understand the consequences and the outcomes of that. But with the first 3 months on the back of that, you're getting told, credit crunch, I'm not buying, no one's doing anything. So it's quite a tough position to be in as a new sales guy in real estate. But it was one of the best times really. And within a few months of the hardship of like people telling you they're not buying anything, you started to see the green shoots of sort of opportunity that was coming off the back of it. And we crossed paths probably the following year when we were both selling and probably the first people to sell Florida property to international buyers when the prices had dropped 80%, and like you, we were selling condos that were $300,000 at $50,000 when the pound was 2 to 1. So it's the first time we kind of, I personally spotted a trend and mind that trend. And we were, for the space of 12 months, you're going from people not wanting to buy anything from you to, you personally selling 15, 20 apartments a month, where I was going through physical leads at the time on paper, and, I was calling through them. And by the time I'd got halfway through this inch thick, pile of leads, someone had bought, Irish guys buying, and, it was just crazy time really. But it was a great time. And for me, growing from that, just been able to build up from there and spot the trends and plug the gaps that people want, identify the right projects with the right developers, and link the right buyers with the right sellers, and make sure you're not sort of going against the trends. It's important to spot the trends and then find the right product to match that trend, and not try and go against the stream, if that makes sense.
Before we jump in, Matt, to the kind of the different opportunities and looking at different markets and things like that, do you miss those times? Do you miss it? Do you miss the 2008 where you couldn't get through your whole Rolodex before you've already sold out everything? And,
Yeah.
I'm just curious because it's stressful too, right? Like it's still like
Yeah.
you're probably working, 10, 12, 14-hour days.
Yeah.
But do you miss those?
Yeah. I mean, it's crazy times because you're just like, you just, it's just great to feel that like you were at the start of something, and I remember having a conversation with my business partner now, Fred Benoit, when he just managed to put together the first sort of distressed condo deal. And, he rang me up and he's like, he just knew, look, we're going to have like 2,000 units coming through from these banks that are looking to let them go at a crazy cash price. And, we're going to make a lot of money here because we could see that the trends were going to remain like that for the foreseeable future. And it was kind of just an exciting thing to be involved with. But there's always another trend, isn't there? There's always buyers, there's always sellers, and again, that's what I think kind of captivates me and always keeps me interested because there's always buyers and sellers. If you're thinking on a global level, when we set up Economic Properties like 10 years ago in the UK, we've been going 20 years globally, but 10 years I set up the UK side of our business, and one of the things we recognized at the time, the UK market was very strong, and I left my old firm at a time when the UK market was really popping off. But we knew that at some point it wouldn't be. And what safeguards us as a business, as a global business, is that there is always a trend. I can't sit here and say no one's buying. I mean, someone's buying, someone's selling. It's for us to spot these trends.
Amazing, Matt. I recall we're going to dig into that, right? Because that's so important. Is that there's always the flock, right? And there's always the wolf, right? And the wolf is always out there. The flock of sheep is always out there. And the flock might move around, but the wolf is also able to move around as well. And we'll dig into that. But going back to 2008, we were the only two groups who saw this opportunity globally, really globally.
Yeah.
And how I saw it, I'm sitting in Dublin in 2007, 2008, and I had lived in the States previously, and I'm back at home. And I turned around to my business partners when just after Lehman Brothers happened. Well, it was actually before that. It's like I could see that U.S. house prices were falling pretty quickly. But after Lehman Brothers in particular, I was like, we've got to figure out how to do short sales, which was a very different route into it than Fred coming to you. Now, I know you were working with Night Knocks at that time, so I'm going to dig into this. There's always a buyer and there's always a seller. You're working with a group called Night Knocks, and this is prior to 2008. They were international as well, and they were selling all over. I recall in 2007, and particularly in 2008, everyone had walked away from the market, right? Absolutely everybody. And the things that we had sold, this is what you didn't mention. The condos and apartments that we had sold all over the world, everyone was trying to cancel them. Everyone was trying to get out of their deals. The builders, all the banks stopped lending. So these people have put deposits down on buildings all over the world, but the banks weren't giving the buyers the mortgages that they need when the buildings were finished. So a lot of people don't quite appreciate, like, not only was the market looking bad going forward, but everything we'd worked on in the previous year and a half was going to shits right in front of our faces,
Yeah. Well, for me, I think that's why, my saving grace was when I entered the market was kind of just leading up to that. So it's not like I had 200 sales under my belt that hadn't closed and you're waiting on mortgages, and that would have been another level of stress, I think. Whereas I kind of came at it fresh in a sort of strange, positive way.
Well, we'd nothing to lose, quite frankly. You know what I mean? We'd lost everything already, so we kind of had nothing to lose. And so I want to make sure that we don't pass this one by. You mentioned two things. You mentioned with massive discounts. So we were buying, $200,000 condos for $50,000. And selling them to our clients. That's number one. But what you mentioned, and I want to make sure that the listener heard it, is the U.S. currency had also taken an absolute nosedive against a basket of international currencies, against the UK pound, the euro, things like that. Like the dollar was on sale as well. So that was a huge motivator, right?
Massive draw, and it's something that I think a lot of international clients do overlook. The currency is a huge factor when it comes to like decision making, and for us to, when we're looking for trends, the first thing you're looking at is the currencies, because, right now, for example, I mean, at the time we were selling a lot to UK and Irish. We've not sold a lot to UK and Irish buyers for some time. The Irish are starting to come back a bit now, but because of, I think, the currency, the pound since Brexit took a pasting and it's never really recovered back from that. And I think with the UK market doing quite well, there hasn't been that motivation for UK buyers to invest outside from what I've seen.
That's right.
And I think, right now, you're looking at the US dollar at a time when it's at parity with the euro, and it's very strong against the pound. And like, there's got to be movement coming the other way, and that's what we're
That's right.
seeing, and that's what we're capitalizing on now.
And so many people don't see that. They really don't. I recall at the time, 2008, we were getting into the condo world. You guys were as well. And we start getting this, big rush of Canadian buyers. The Canadians were all over us, right?
Yeah,
Chinese were all over us. I don't know if you recall that. Like you say, Irish, English, Scottish, Norwegian, Swedish, all of that, right? They were all taking advantage of the currency issue as
yeah,
well as obviously the distress. But to your point exactly, that all switched up. The dollar, the currency was what knocked the international buyers back out of the American market for once the US currency kind of recovered. The next you know this yourself. The
yeah,
next big tranche of buyers, certainly here in the Florida market, were Brazilians,
right,
Venezuelans. They just
yeah,
literally came in and took the place of the
yeah.
Irish, English. You recall that, right?
Yeah, yeah, yeah. I mean, we've got sales teams in Latin America, South America that are selling for us, and like we're seeing them, they succeed where we don't right now in the UK, if that makes sense. Like they've got a lot of buyers from these sort of higher risk, South American countries looking to put money into the US, and it makes sense for them to do so.
And we're going to get into the next phase of your career then, because you're exactly right. Always know to the listener here, always know when you look globally. So the US is doing well, it's not doing well. Europe is doing well, it's not doing well. There's always somewhere popping up and there's
Yeah,
always somewhere popping down. If you can
yeah,
find out who's popping up,
yes,
any nation that's all of a sudden starting to do well economically for whatever reason, let's say Australia, 20
yeah,
years ago, just went on this 20-year run. You know,
yeah,
I've got some friends who really managed to mine the Australian market and bring
yeah.
Australian buyers over globally. So, Matt,
Right.
how long did you guys in Benoit, how long did you guys kind of mine the US market for until you start looking for new trends?
Well, we sold probably for 7 or 8 years on the condo trends where we tracked the market, we found value, and we saw prices going up. So we set up a management company to manage the apartments that we sold, and so we had a lot of repeat buyers that were coming in to buy again and again. They always wanted opportunities. We were finding like condo conversion blocks of units that we could sell. So like instead of it being one-on-one sales, it was easier for us to find like 100 units on one
Yep.
community, sell it, and move on to the next community. So we kept doing that until the inventory had sort of cleared through the banks, and then it was then down to us then acquiring sites, buying sites ourselves, and then doing it again. But we continuously playing catch up. You're trying to make sure everything was always aligned to yield, really, because these condos were always yield driven cash purchases. So it was always never really lifestyle, or never really like people looking for any other reason other than to put the cash into a high yielding asset. And then as the yields have come down, and as we've seen, like around 10 years ago, we started to see that the yields are getting eaten into a bit. You got these communities getting older, HOA costs have been going up, insurances are now going up on the back of all the stuff that's going on in the world. And so we've moved more into like single family homes in the last 7 or 8 years, built a construction company, and have started to deliver like high yield homes where you get the new build warranties in place, and you've got the high yield coming from the fact that there's no HOA fees. So that's kind of where we've moved in from a US point of view. But it was probably, I set the UK side of our business up almost 10 years ago. It was 10 years this year, and we recognized that we had, I think, 2,000 buyers that had bought with us in Florida that had put pounds into dollars, and suddenly they're sat on strong dollars. They're seeing the Florida market as 4x, 5x on what they bought, and they're saying to us, where else should we invest? And for us, it seems sensible to then offer a bit of choice. And since then, we've built our business, a successful one, in aligning ourselves with the right developers, bringing together the right team of lawyers, the finance guys, the furniture guys, management guys, and packaging deals that people feel offer the most credible opportunity in the market that it's in. I mean, you can never. Some markets are higher risk than others, but for us, it's just to make sure that this is as strong an opportunity that we can deliver in this market, and there's a fair balance of risk and reward.
Matt, I'm glad you said that there's certain markets that are higher risk than others, right? I want to take the other side of the coin, right? Because a lot of people listening to this are sitting somewhere in the United States. I'm sure we've got some folks over in different areas of the country, probably because David and I were traveling abroad and we handed them a podcast card and said, "Hey, go listen to it." So we'll have, 5 listeners in Greece or 6 listeners here or there. But for the
Yeah.
most part, obviously most people listening to this are sitting in the United States somewhere. And interest rates are up. They've been up for the last couple of years. The election happened, whether you supported it or didn't, it's
Yeah.
neither here nor there. But a lot of people, including myself, selfishly, I'm very, very interested in what's available outside the country. But I think the biggest number one challenge, and I know you've talked to a million investors, is like,
Mm.
where do I even like focus? The world is so big, right? You just said
Yeah.
it, that there's markets that are more challenging than others.
Yeah.
Talk to us, talk to me, like, hey, Matt, I'm thinking about investing
Yeah.
abroad, but I don't even know where to start. Like, how do you
Yeah.
help to focus me as an
Yeah.
investor to where I can at
Yeah.
least start with like a section of the world based on a criteria? What does that
Yeah.
sound like?
Yes, good question. I mean, I think in the first conversations, I'm asking people what their overall long-term goals are. Some people might have aspirations to just put some money away from the kids' retirement, for so the kids' university, or fund their retirement, for example. And so you might take more of a lower risk approach to that. Whereas someone might say, look, I'm sat on a couple of $100,000 and I want to put it into a market that's gonna pop off. And so there's slightly different ways you can skin it. One of the big factors is probably financing. You'd be asking people, look, would you prefer to just buy something in an emerging market as an outright purchase and benefit from that lower price point with the upside of growth, albeit in a higher risk market, or might you favor somewhere where you can get good leverage at low interest rates? And based on that conversation would kind of guide me from there. But with people sat on strong US dollars at the minute, whether you buy in Europe, for example, with an amount of dollars and then leverage, which is a sensible move, or whether
Right.
you take the whole amount and buy cash in, say, Costa Rica or Panama, for example, there's equal merit to both based on everyone's individual like aspirations. So I guess there's no right or wrong, but it's our job to ensure we find the right opportunities in all these markets. And we've aligned ourselves with the biggest and strongest developers in many of these markets that we're in. So at least, regardless of what someone's objective is, we've got an option for them. And Fred, my partner, would say, there's an ask for every seat, and it's a good comment. Like, it's not for me to decide what you want. Do you know what I mean, Clark? Like, you have your own unique aspirations. So for us, it's about providing the spread.
I think one of the big misconceptions is if you're going to a different country, you're pulling all the money out of your mattress, underneath your mattress, and you're
Yeah.
paying for that thing in cash. There's no financing options. I understand every country is different, but where, like, is that common to be able to even have like some sort of 50% financing or 70? I mean, is that something that you see amongst the areas you sell in?
Well, this is it. I mean, like a lot of the deals we did in Florida were all cash deals, so I weren't even discussing financing for 10 years of my career. Do you know what I mean? So we were doing deals with people based on cash deals, but it's become apparent now more than ever that some of these European markets where you've got like the interest rates are pegged against the euro ball, the rates are crazy low even for foreign buyers. So we did a deal on the Algarve, really nice community called Bayline. And we sold, we sold 70 or 80 apartments on a project, mainly to Americans and Canadians. And, we secured financing for them, working with a couple of banks there. We were able to secure financing up to 80% loan to value in many cases. Typically, like for the sort of run of the mill products, like homogenous, if you're just going to summarize it, it was kind of like 65 to 70% loan to value at rates under 3%. On a 30-year fixed, so if you can get rates like that in like Portugal or Greece, and you can align yourself with the right developers, you quid's in really, especially when you look at the price points. Like America's getting expensive, interest rates are also high, you sat on strong dollars. It's like, well, actually, if you're buying, I don't know the average price of a condo in, say, Houston, for example, or New York City, but it seems if you compare the price points around Europe, America looks quite expensive, relatively speaking. Not to mention Latin America. You start discussing that, and Miami, for example, versus Panama City. Panama City might be 4 times cheaper than Miami for a similar high-rise luxury condo. So it depends on your risk profile and how much you're willing to stomach. But there's opportunity there for sure.
There's got to be a catch though. So if I'm sitting in the Algarve, right, and I want to buy an 80%, loan to cost condo or apartment, there's got to be just riddled with documentation that I have to provide. Like how tough is it? How much nails on a chalkboard process is it to actually go through and obtain that loan at 80%? Do I have to give my firstborn or do I have to give both?
Yeah. It's a good point. I mean, for us, we're in the sales game, right? So we want to transact. We want to do it smoothly. We want everyone to have a positive experience. We don't want to send people going on a wild goose chase and then end up getting told, sorry, computer says no, you're not going to get financing. So that's why, again, I've been 10 years of just selling cash deals. It's like I'm not going to chase after financing deals that people can't get. You know what I mean? But, as I say, we've had hundreds of successful financing applications go through in Portugal. And this is where me and my business partner did disagree initially because, he's someone that's like buying and selling as an experienced investor himself. He'd always want to deal with the banks directly. Whereas actually, really, like for us as a sales company and as a property company, it's actually, there's real value in working with a credible broker who can just help just to offer the spread of the products, simplify the process, dot the I's, cross the T's, submit the application with the banks and do all the legwork. And the banks pay them, so you're not paying a premium for their service. But we found that actually dovetailing that, it makes it very easy. So what we tend to do, before someone goes ahead with something, they won't get approval for usually within 3 to 6 months of the project being completed. So there is that risk there of the products changing between, say, buy off plan, 3 years off plan. The product might not be the same by the time you come to completion. But what we do, we typically would get the client pre-qualified on a call where, based on what them telling the broker being true, the broker will say, yeah, look, Mr. Shaw, we've got at the moment, we've got 35 products ranging from these rates. Yes, it might bounce around a bit, but from what you're telling me, I'd be confident that there's going to be a product for you. And that tends to be the first port of call. And then from there, when clients are going ahead with stuff, then we get into the nitty gritty. But I think working with a credible broker is a piece in the jigsaw that I think is almost like it might be easy to overlook that and think, oh, we just go with a bank. That's the smartest thing to do. But in actual fact, working with a credible broker on the ground has some merits.
You know what, Matt? I'm going to speak for the American side of the argument here. I know because I've, spent a while in your seat. I know that you actually have buyers from all over the world, anywhere from, Saudi Arabia to, United Arab Emirates to South Africa, Nigeria, wherever, Russia, maybe less Russians these days. But I know you have buyers from all over the world and you have American buyers. And one of the things I want to say to our American listeners right now is that what I have experienced in Europe is your company and your role is very common, right? There's a lot of companies that I can go to in Europe that that I can walk in the door, I can sit down and I can tell them I'm an investor or I'm a lifestyle buyer. I like the sun. I want to use it 3 weeks a year, or I don't. I'm strictly here to put a long-term tenant in, and I want to get some finance. So I can give them my suite of wish list items, right? Yeah. And they will say, well, have you thought about Greece, or have you thought about Spain, or have you thought about Panama? Okay, if you're more investment driven, maybe you want to look at Canada, And then I know we're going to talk. We're going to get into, what strata of society are selling to these days, but let's just keep it national at the moment. Americans don't have that. They really, it's just it's a service that doesn't really exist to the average person over here, where they can go to somebody. America's obviously very America centric, and so there's very few places in America can pick up the phone and say, okay, well, I know that you work in multiple markets. I know you've got my back. I know you've got those brokers that you were just talking about. I know you've got my furniture. I know you've vetted the developers. I know you've worked with these developers before. I know the lawyers. I know
Yeah.
the currency exchange people, and that you offer this concierge service that doesn't really exist over here. And so Americans don't invest overseas at all because they've got to go it alone. They got to find a property. They got to strike up a relationship with some local agent. They
Yeah.
don't really know the market.
Yeah. Yeah.
So overall, I know that you work with investors all over the world, and
Mhm.
Americans are just one little block of that. Can you walk
Yeah.
me through, the people globally who are buying right now, and
Mhm.
typically what they're looking for?
Mhm. I think a lot of people that are buying right now with us would be people looking to diversify, really, to get the money out of either high risk markets into safer markets. And I think diversification is one of the biggest trends that I'm seeing. That, like, we'll be chatting to doctors, working professionals, entrepreneurs, etc., that are time poor, cash rich, that want to just diversify. They're not looking for like deal of the decade. They just want to know, look, I want to invest a bit of money here, I want to invest a bit of money there. I want it to be safe, and I want to, profit from the strength of my currency. So I think it's not whereas in 2008 you've got like the aggressive investor types that are like, they see the opportunity, they've got some cash, they want to put the money in and pile in. Like, it was kind of like a different audience then. Whereas right now, I think like you've got more of a professionally led, audience of people, pool of people that are sat on a lot of money that want to invest it into safe markets. And so for us, like, that's what we're basically tapping into. So if we can get, like, I mean, our ideal client, putting the US aside, would be like expats that are living in like higher risk markets that, for us, if we've got someone that's got the money in a safe market, it's harder for us to encourage them to invest into higher risk markets, right? But if you've got someone that's in a high risk market, say you're working for Saudi Aramco, and you want to put your money, into safer markets, you might then consider the US or the UK or whatever it might be. So our target audience tends to be like that type of profile.
So to be clear, when you were selling in 2008, 2009, your buyer at that time was kind of just this more middle class, opportunistic. I think there's an opportunity over there. They come across your marketing. But what you're saying now is most of your buyers are pretty sophisticated professionals. And so that would mean that your products have changed over the years, very much so,
Yeah.
right?
Good point. Yeah, I mean, like we've gone from selling like the $50,000 condos where you'd have to peg it against the yield. There's, there was no way we were going to go
That's
and
right.
sell something beyond that. It was always like,
I
look, the
remember it
yield's got
well.
to be this, price has got to be that, and we were sort of meeting that need. And 10 years ago when we started to diversify outside the US for the first time, you're going in with that mindset, so you finding like yield driven opportunities in all these different markets, but then you realize, no, like, people are buying in Portugal right now. They're kind of not looking explicitly at the yield. They're looking at various factors: the financing, the weather, the culture, the climate. As an opportunity as a whole, they see it as being a safe place to put some money. And so it was almost a learning curve for us to see, well, funnily enough, you send out a product that may not be the highest returning investment, but it has beachfront or some desirability to it that really makes it a strong product, like, that
Yeah.
people really like, people buy it. And what we've seen is that the most profitable ones have been those ones where you're not just looking at the numbers.
Yeah.
You're buying a tangible asset here. You're buying something with a view that looks straight out over the nature reserve and sea or whatever, and that view is desirable. People are willing to pay a premium for it. So I'd say in the last 5 or 6 years, the deals that have been most profitable for our clients have been ones where fundamentally there's that desirability, and people almost put the yield on the back seat a little bit, so long as you've
I
got,
need I need to jump in right there. I have been banging on about this for the longest time. US investors, by and large, there's a lot of big, websites and podcasts over here, and it's all about cash flow, cash flow, cash flow, cash flow.
yeah,
And cash
yeah,
flow, to your point. So you and I were both selling cash flow, and I was
yeah,
selling cash flow deals, Matt, right up until 2021, right?
yeah,
Interest
yeah,
rates go higher. And to say that my investors fell off a cliff is an understatement, right? And now investors, large in the United States, are really only buying new developer product that's buying down the interest rate for them.
Yeah,
That's
yeah,
it.
yeah,
If if
yeah,
if, if the yield isn't there, the
yeah,
investor's not buying it. And
yeah,
so they're kind of investors are really limiting their horizon to where can I buy a new build
yeah.
where the developer is going to buy my rate
I
down.
got the
That's it.
interest.
That's
Yeah,
their
yeah, yeah,
primary. They don't care where it is, where it's located,
yeah.
how much it is.
Yeah.
It's all just like who can artificially bend the yield
It
so
seems
that
like
so
it's a little bit of a smoke and mirrors situation, though, isn't it? Like ultimately, there's a net price that developers
gimmicks.
need. They're going to work the numbers, and instead of offering a 10 grand discount, they're paying down the rate a little bit. So
Yep.
I guess
Gimmicks. Gimmicks, Matt.
it
I was
works.
always, even back in the day when the yield changed, Matt, I was like, I'm not going down the gimmick route. I'm not
Yeah,
going down. Remember in 2008 and
yeah,
2009 with people saying, oh, we'll
yeah,
buy you a TV, or we'll do this,
yeah,
we'll buy you a car if there's just gimmicks, gimmicks, gimmicks. And
yeah,
if you
yeah,
attach yourself to gimmicks, you're dead in the water. And to
yeah,
your point, this is what I want to reiterate. You
yeah,
just said that the investors who bought quality, location, view, that might not have the highest yield turned out in hindsight to be the most profitable deals. You've just said that.
correct. Yeah, I would agree with that. Yeah, 100%. Yeah. So it's
So, with that being said, I've got two questions for you. Over the last, I know Fred, the owner of the business over there, Matt, very well, and I know you are too. And so I hop on the calls maybe once every 6 months. We banter about international market. He'll call me like, "What do you think of this? What do you think of that?" And so on. And I know that you guys have put to bed that kind of low end yield driven investor, and you've gone with a kind of more high end and more exclusive type buyer over the years. So with that being said, can you tell me where you see the higher end growth that has leverage and is a stable market, and maybe where you see that kind of more lower purchase price market that has a little bit of growth but no leverage? Where do you see the high end dollars going, and where do you see still that kind of more that more opportunistic? Where do you see globally
yeah.
where those markets are?
At the moment, I mean, if you're segmenting it on like Europe and the US side, like we see value in like the Latin American markets, Panama, Costa Rica, where you can come in, buy cash with a developer that's credible, where you've got like, 2 or 3 year payment plan, buying a nice high rise with nice views and features and facilities that you can do Airbnb short-term rental on. And, you can buy in at a price that is still like,
What's that price?
well, for example, Panama, you could buy under $200,000 for like a one bed condo that has got the sort of all the facilities that you'd expect from like a high end Miami condo, for example. But you're buying under 200 grand rather than 500 grand, for example. So we see value in that type of product. We've got a beachfront one in Costa Rica where the developer's done like 7 or 8 different projects. Some of them in the US even. They're delivering a project in Jaco where our price points there for a 2 bed apartment is like $350,000. And this is like something with the sort of resort style amenities, and everyone's got a sea view and something that you can't replicate. So, stuff like that as opportunity. And then moving more towards the European side, like we've done a lot of business in Portugal where because of the financing, as I mentioned, the safety of the market there, the draws, low cost of living, the weather, the climate, the culture, like all these factors have made Portugal quite a profitable place for us. And don't forget, from our point of view, like we'll put different things out and we'll almost say, well, will the audience like it? We almost guided by the audience. The audience says they want Portugal, and we go into it, we find more deals, and we invest more energy into it. And we found that like Portugal was a place, funnily enough, like Spain is, you'd argue, same sort of profile, but Spain has never flown with our audience. I don't know why, but it just never
Yeah.
has. Where Portugal, people love that because of the financing, and the price points have gone up a fair bit. So for example, the one on the Algarve that I mentioned, I mean, we were selling 2 beds there for like 380. They're now like 700. So like the Algarve's top it. It's very hard to find residential deals on the Algarve that's not like touristic type, like kind of like
Yeah.
homogenous, like hybrid products that are a bit like
Yeah.
neither here nor there. Like we'd rather just sell residential, really. we're doing a lot on the Silver Coast of Portugal where the price points are lower, but you're still close to like Lisbon, but you can get in at a price point that's sub 200,000 euros. So that type of product works really well because you can finance it, so you don't have to tie up all your cash. So we've seen value there. We've done a lot in Lisbon, but market's kind of moved upwards now. So we, for us, like we're coming into the back end, coming into the year, and we're like, well, the trends are still there from Americans and Canadians to buy in Europe. Now you're looking at a one bed in Lisbon is now 400 grand. It's not as cheap as it was, right? So you've got the financing, okay, but where next? Where's the next place in Europe where we feel like it's an investor-driven price point where you can still buy with credible developers at a decent price? And we've put our money on Athens. We think there's similarities there with like digital nomads, culture, history, etc., demand. And as an Airbnb location, tourist destination, it's one of the highest globally, Athens. So we looked at that market and we've pinned down a couple of deals right now where we see the same trends as where Portugal and Lisbon was 4 or 5 years ago, where you're getting in sub 200,000 euro. You can finance it and you can get central investor-driven product at a price that we think has upside. So it remains to be seen. I mean, we'll see how that goes, but our money's on, Portugal's going to be, evergreen. That's going to do well over we see that, 5 or 10 years is going to go from strength to strength. But definitely in terms of emerging Europe, we think like Athens is a place that we can do a lot of business.
Matt, with obviously if you've got a price point that goes from 400 to 700, right? That gets to be a more difficult sell. It's just tougher for investors to wrap their minds around.
Yeah.
I think a lot of times, as you've been in this industry 20 years, David and I have been in real estate for a long time, and we tend to just assume that people understand certain things. For me, it's easy because I've never bought anything international, so I think I have a lot of beginner questions and also beginner things that are unknown. So you say, okay, hey, Portugal's getting kind of expensive, 700K is tough. Let's go find Athens, right? But then you have to balance the risk, right? You've mentioned multiple times in this conversation. It's high risk, low risk, right? Will you define for our listener what that even means? Like when I think we have an idea of what a low risk versus high risk, but in actuality, I don't. Like tell the listeners when you're scouting out properties, what the hell low risk versus high risk even means in terms of multiple layers.
I'd probably say that, from a legal standpoint, some of the markets that present the best opportunity from a sort of emerging low price upside perspective might be in areas that don't have as strong legal parameters around like real estate and pre-construction real estate. So, for example, like Portugal, it's very, very safe where you've got like a very very well-established legal system there. So you can rest assured if someone's serving up a deal, a developer's got something there that's funded by a bank or whatever to build it out, that you're fairly secure with that. Whereas if you start moving into, Mexico cities or, some of these other markets, then you do have to be a bit more careful. So what we tend to do is if, we're not adverse to going into some emerging markets. We've sold in the Mexico cities and in the Far East, like Thailand, for example. But when the risk goes up, we tend to then favor the best developers in those markets. Whereas if we're comfortable in the market that we're selling in, we might then find like smaller developers that are doing like 25, 30 unit schemes where, it's a smaller group of people doing deals. And we feel as though we're comfortable to sell that type of product, but we wouldn't sell that type of product in like a Mexico City or a Thailand, for example, where you're best off just sticking with like the biggest players, like the publicly traded blue chip development companies. And so that tends to be how we do it. So if it's a slightly higher risk market, we'll tend to favor the higher, most established development companies.
I think that's golden. I think that's the way. Like for a lot of people, they just think investing in America is less risk. I can tell you it is not. Particularly if you're, investing or you're buying off plan. America just has the same exact likelihood when you're buying a pre-construction product. And I wanted to ask you that question. So I think the golden rule for me after 2008, Matt, was I'm going to buy something. I'm going to sell something that's built, that I can touch it,
Yeah.
I can feel it, I
Yeah.
can move
Yeah.
right in. I can see that it's there. Because one of the
Yeah.
biggest risks I think there is buying overseas property
Yeah.
is when you're buying and people are telling you, oh, the airport is going to come in, and then
Yeah. Yeah.
they're going to build five hospitals, and then
Yeah.
innovation centers coming in, and
Yeah.
we're going to build this this beautiful community. But when you go there, there's a bunch of fields and there's nothing there
Yeah.
yet.
Yeah. Yeah.
And so this concept of buying the building that is there and built versus the
Mhm.
building that is on drawn on a piece of paper or in a
Yeah.
marketing brochure. Tell
Yeah.
me how you guys have managed that component over the years, like the selling the built environment versus selling an off-plan type product. Because I do think
Yeah.
off-plan, not always, but I think generally carries a lot more risk, if you will. You guys were talking about risk of, legal risk or currency risk
Yeah.
or local risk. I think the biggest risk is developer risk.
Yeah, yeah. No, I wouldn't disagree. I mean, funnily enough, like the UK market, like a lot of people have a lot of the domestic buyers here would be like, I wouldn't touch overseas. But all the biggest problems that I've seen in recent memory have always been with UK-based developers that have gone
Yep.
up because they're overexposed or that, they've bitten off more than they can chew. So I think for us, when we're looking at the off plan, the credibility of the developer counts for a lot. And also, often, if you're looking at the payment conditions, like you can usually see if this, if a bank's funding the construction or funding a large portion of the build for the developer, that usually is a strong sign of credibility there. If one of the big banks are going to be funding the construction, so often if the developer's asking for too much up front, that's usually a telltale sign to kind of reconsider your options. Really, not always, but you want to make sure at least if you're going to de-risk it if you have got a long off-plan product, make sure you're staggering your payment conditions in line with the build progress. So for us, like most of our off-plan stuff would be like in Portugal, you're putting down 25% over the course of construction. So, again, like contractually, you've got the protections there, but also like the developer, you're not paying 75% of it until the very end. Whereas when
Yeah.
there's these deals where they're asking for like, there was one that I saw in Thailand the other day, where the project is at best 4 years off plan. It's probably call it 6 when they've actually got round to finishing the thing. And they're asking for 90% of the funds in the next 18 months. So, for me, I'm thinking, well, these guys have done stuff before, but do I want to be fielding calls from clients that have bought 90%, put 90% of the cash in, and they've not got their end product for, endless amount of time? It's not what we want. So we tend to look at that critically. And with the credible developers as well, usually there's funding in place. So not only is this the protections there that you don't have to pre-sell a certain number to hit to make sure it gets built. Usually, like it doesn't matter, and that means then you can sell with confidence, knowing at the end of the day it's going to be delivered. And so far for us, like we've been fine. In 10 years we've been doing the international stuff. We've not had any, touch wood, any massive problems, bumps in the road as usual with like planning permits, or we had a project where like a party wall fell down next to next to the site, so they've had to go and get replanning and stuff. So there's you're going to get these things, but overall, like I think fundamentally, if you're dealing with the right developers, credible guys that take pride in what they do, and they've took the right the right provisions in terms of risk, like you normally there's always a way to navigate any variables.
Matt, there's a bit of a lure, right, to investing abroad. So, as an American, we tend to, as David alluded to earlier, we tend to just like invest in things. We tend to not necessarily look at like, oh, am I planning on moving there or spending a lot of time there? It's just kind of like a very in the box on a spreadsheet. There's not a lot of emotional attachment to it, right? The international kind of opportunity is certainly more alluring for things other than just like boxy spreadsheet returns and yields, to your point. What else, like, what are some of the other advantages other than, because like if I'm going to invest 75K in a deal and I'm going to make, let's say, $200 a month cash flow, and then your deal in Portugal kicks off the same amount, why do I even want to take the risk and try and figure out financing over there when I can just do it in my backyard with my preferred mortgage broker and my preferred real estate agent? So there's got to be other reasons why people are going to go invest in the Algarve or invest in Thailand. Talk to us
Yeah,
a little bit about the allure of the other stuff, the kind of the return on your lifestyle as opposed to just return on your cash invested. What are
yeah,
things, visas, things of that nature that
yeah.
people look for over and above just a return on your cash?
Well, there's I mean, like, yeah, the golden visa is a one that some people have had reasons to buy for. Where in Europe, certain different countries, it's they're tightening it up really. But in Spain, Portugal, Greece, etc., if you invest a certain amount, 500,000, 250,000, you can get a golden visa, which gives you freedom of movement across the Shenzhen zone. And a pathway to citizenship in Europe. So that's a draw for people that want to diversify in that respect and maybe consider moving abroad at some point. I know Portugal like the tax benefits as well as a as someone working in Portugal and derives their income from the US, for example. Like there's a lot of tax advantages to that. It's like the digital nomad draw for people where you can live and work in this day and age. Now people are working from home and they can live and work wherever they want. So there's also advantages there. If someone wants to buy in Portugal, for example, and plonk themselves there for 3 months, rake in a load of money from Silicon Valley and sit there in Lisbon where the cost of living is extremely low. It's a bit of a life hack, I think.
Is it working too well? I noticed that a lot of countries in the EU are upping the limits where, the minimum went from 250 to 500, or there's pushback where they're removing the golden visa for
Yeah,
buying in real estate. I've noticed that in multiple countries in Europe. Is it working too well? And they're like, no, no, no. We're pulling this off the table.
Yeah, well, yeah, they are pulling it off the table. So, like, Portugal went from being like 500,000 on any residential purchase to then being, you could only do it with a touristic property that had a certain attribute to it, and then they stopped it altogether. So Portugal knocked it on the head. Spain, yeah, I think that they're considering knocking it on the head, and obviously you've got Greece right now that you can still do it. So I think it's more political. Funnily enough, like you think, oh yeah, you'll hear talk of oh, the local market's suffering because you've got all this foreign money coming in.
Right.
But actually, if you look at the number of golden visa applications in, say, Portugal, it's an absolute drop in the ocean. So it seems like more of a political game that's going on that they want to stop the golden visa. I think Europe, especially, are like putting pressure on these different countries to close these options for whatever reason. So yeah, I don't know how long it'll continue, but
And listen, Matt, we're gonna start wrapping up in a little bit, but the dollar is on a run again. Dollar's kind of
yeah,
climbing again, as you well know, and so this may be a fortuitous and opportunistic time for anybody with U.S. dollars in their pocket, where they look around here in the United States and there's no
yeah,
deals anywhere. Everything's
no,
overpriced. There's no
yeah,
yield.
yeah,
I just looked at a commercial deal last night, and for my hard work, I will lose $66,000 a month, and
yeah,
so no bueno, right? With the dollar on a new run,
yeah,
and a lot of U.S. buyers, U.S. investors, Matt, they kind of don't look at currency where. If I'm sitting in Europe or I'm sitting in South Africa or I'm sitting in New Zealand or Australia or keep on naming countries all day, but I'm sitting there and I'm looking, I earn in Australian dollars or South
yeah,
African rand, and I'm looking how my currency is doing against. If my currency's, super strong, if I'm in
yeah,
Norway, you know what I
yeah,
mean? I'm going to look at, Thailand and I'll get essentially a free house.
yeah,
Americans tend not to do that. They tend not to really understand when their dollar is strong or where their dollar is
yeah,
weak. They don't really have that worldview where most other
yeah,
nations do. And I don't mean that as a critical thing.
no,
America is just so huge and so vast. They can always move their money to a cheaper market here, essentially
yeah,
within the United States, but they're
yeah,
missing out on the currency play. So
yeah,
as
yeah,
the dollar is on this kind of new run, right?
yeah,
Um, you mentioned Greece being an opportunity. Um, it certainly will stop international investors buying in America for a while.
Yeah.
America's just not going to look so pretty. If I'm
No,
sitting in Europe, I'm not going to buy
no,
my dream house in Florida.
no.
It will slow down some Chinese buying. It will slow
Yeah,
down international, even South American buying may slow down in the United States for a minute while
yeah,
the US dollar is strong. So how would you use if I'm going to ask you two questions in one. Imagine for a moment, instead of sitting there in Manchester, England, you're sitting here in Manchester, New Hampshire,
yeah,
right?
yeah, yeah,
And you're Matt, and you have the same head on you, but you earn in US dollars and you're sitting in the United States. All right.
yeah.
With a strong dollar on your hand, where are
Mm.
you going to go buy? What would you do? First and
Yeah,
foremost, I'd contact a company like yours. We're going to get your
yeah.
details in a minute. But what would you do if I gave you, 450,000 US dollars right now and said, "Go, Matt, buy me something internationally and use my strong US dollars as effectively as
Yeah.
possible."
I do Europe where you can finance, and I'd put in, decent amount of US dollars into a secure deal with a solid firm in a central location, that has a certain USP to it, so that you can safeguard your money but get good leverage of your cash as well. So you're getting double whammy really. You're getting the benefit of the currency play and also the benefit of the low currency, the lower interest rates that you can secure on the financing, and good leverage on the asset as well. I think that's a strong thing to do. So anything like, like I say, Portugal, anything in Portugal you could buy, I think would be a smart move. UK, if you're going to do anything like Manchester ahead of London, the yields are better, price points lower. You could put your US dollars to good use here in a way that I couldn't. Me sat here, like I'm not going to negotiate like a 20 or 25% discount from a developer. They're not gonna even entertain it. But you get that from the currency right now in the US. So anyone that buys a fundamentally strong investment in Manchester Central, for example, the currency is going to do the heavy lifting really over time. And if you're getting the growth and the yield alongside it, 10 years from now, you sell it when the dollar and the pound has come back to more of a, an average sort of level that I'd say it was bouncing around 1.6 before Brexit. I think $1.6 to the pound before Brexit, and then it crashed like 1.12. And now it's at like 1.22. So I think there is definitely movement the other way. And then from there, like depending on what you're trying to do, like if you've got some money you want to speculate on, like, it is worth looking at the Panamas, Costa Rica types, if you're willing to buy cash and you just want to like set it and forget it. I think buying there, borrowing a bit of money into these markets where price points are good, you got flexibility of payment where you can just like sort of chip away at it over the course of say a 2-year construction. Something like that would work well. But as I say, everyone's different and everyone's goals are different. So,
Well, I've always liked the UK market simply because they speak English.
yeah,
Because there is a language thing. It's great when we're buying, and it's great that you can help me out with the property management company, and it's great, blah, 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 blah. But long term, my bills are going to come in Portuguese.
yeah,
Or my, property taxes are going to come in Portuguese, or my HOA is going to get negotiated in Portuguese. Let's say if I buy in Portugal, obviously.
yeah,
I've always liked the UK for that matter. I
yeah,
love the UK number one, and
yeah,
buying somewhere in central Manchester, that's a killer idea. I love that. I
yeah.
absolutely I love that market. I can't tell you how easily I would live in Manchester.
And the
So
rent market's bananas though, just because Manchester's retention rate of like graduates now has gone up a lot. The population's gone up a lot, and there's just not enough being built. So, funnily enough, like rental demand. I mean, I'm looking at like the typical rent and average rent, and I'm sat there going, I can't believe you have to, the average rent might be £1,500 for a 1-bed
yeah,
apartment, whereas before it would
mm,
have been £650 for a 2-bed 10 years ago. It's like
yeah, it's
rental
nuts.
pressure has drove like rental prices through the roof, and that's pushed asking prices on the property up, but yields are still good. You're still getting like yields above 5% net, in central locations and fairly decent price points. So I do believe in Manchester as a city.
Yeah,
Um,
I definitely agree with you. And you mentioned leverage. So we're borrowing here as an investor.
yeah,
We've had a run up in bond deals over here recently, so
yeah,
we're paying 7.65% or
yeah,
so
yeah,
on an
yeah,
investor loan, unless it's
yeah,
gimmickly bought down.
yeah,
But
yeah,
outside of that, that's stripping out all the upside.
yeah,
I I know that I was quoted a LIBOR rate, so um, maybe I'm out of date with my LIBOR. I think they've used I think they're using a new benchmark over there. But I was quoted a rate, I'm going to say about 2 years ago in Portugal of I think it was 2.75% or two and a
Yeah,
half
I mean,
percent.
it went up a bit and it's coming back down a bit now. So it really is crazy cheap. So the
Imagine
finance,
buying about 2.5%.
I mean, I'm paying 4.5% now on my house. I've got a tiny mortgage on the property, and I'm paying like I think I'm paying about 5% on my domestic home. I can go and buy a property in Portugal, get great leverage on my cash, and get it under 3%, which is madness, really. But that's the reality. And I think like it's such a significant factor that if even with the strength of the dollar right now, if the financing in the US was at the same level, we would still be selling to Brits in Florida because you'd be like, well, you're
Yep.
only buying up 20% of the money that you get exposure to the currency on, and the rest of it's leverage from the bank at under 3%.
Yeah.
So it's
Yeah,
kind of
no,
like,
it's it's eye-watering to see the
yeah,
opportunities. There is the one thing that a lot of people will ask you about exit strategies. Great buying, great managing, great owning, but then you come to sell it, and you're
yeah,
dealing with local taxes,
yeah.
you're dealing with capital gains tax, and how do you advise people when it comes to sell? What kind of advice do you have for people? Do you give that to them on the front end? It's like, look, when you do come to sell, here's what your taxes will look like. Tell me about that real quick.
Well, a lot of the places that we're involved with have like dual tax treaties for like Americans and Brits, for example. So in that respect, the tax exposure is like it's never a simple subject, but there is dual tax treaty, so you're never going to pay double tax on your profits. But typically, we'll just align ourselves with the right accountancy firms that would ensure optimization of the tax side, so you're not paying anything over what you need to, and it's done in a simplified way.
So you'd advise people to, as part of their due diligence, as part of their rationale and their overall homework, is that, investing in countries that have dual taxation agreements with the United States would be
Yeah.
definitely an advantage over countries that do not.
Yeah, definitely, yeah. And I think there's definite merit in that. And going on to resale again, you'll know as well as me that like a lot of the cash flow deals that were being mooted when we were selling the Floridas were like houses in like awful streets in the back end of like Buffalo, New York or whatever, where they got these
That's
like
right.
and yields like 25%. But there's no one at the end to buy that unless there's no end investor that's going to buy that at an 8% yield. Like, so there's never any upside in terms of capital growth, and there's no one at the end of it in terms of a homeowner that can afford to buy it. So at the end of the day, you're buying something there that you can never truly sell. Whereas going back to my point before, like with the desirability element, whether it be location, whether it be view, whether it be the project itself, like if you're buying on more of an emotive level and you can just detach yourself a bit from the returns, you're not like completely governed by that yield number. If you detach yourself from that a bit, like when you come to sell it, you're selling a desirable product that someone's going to want, either a homeowner, lifestyle buyer, whatever. It's not just a numbers driven decision. So I think the exit strategy, that's when you really pay. Because like now, for example, Bayline on the Algarve, yes, the investors were buying at 380. Yes, it made sense as a yield option at that time, but it was a desirable product and people are now paying 700 for it because they want it.
Yeah,
Yeah,
amazing. And there's people all over the world that want it. Matt, we are going to get to wrap up. But before we do, Clark, do you have anything else you want to add or ask Matt I know that we're trying to take the 3-year-old asking Matt questions here so we
no,
get as
no,
much out of Matt as possible.
Yeah, I want to just one point I want you to hit on, Matt, because we can talk about yields, we can talk about interest rates, we can talk about high risk, low risk, but I think ultimately, and it's easiest for me as someone that's the only one on this interview that was born here in this country to be able to
yeah,
speak to this point, is that it's scary. Yeah, 3% is great, 5% is great,
yeah,
Portugal, all that stuff, right? David and I have spent a lot of time on this show trying to talk about different things of real estate investing, scary or not scary, but ultimately it comes
yeah,
down to mindset, right? And
yeah,
so we can talk about all the nuts and bolts, but ultimately you've had conversations with so many American investors along with
yeah.
other investors all over the world, right? What makes an American investor able to get over that fear of just investing outside of the walls of the United States? Where have you seen that success and what they've been able to bridge that gap? Because I think almost that's the most important question. I should have asked that first. The most important question on this entire conversation that someone can walk away with is, how do I get the confidence based on others in the past that you've worked with that have become successful investing abroad? What is the mindset that they need to have to be able to complete that?
I mean, I think it all comes down to trust. Trust in the people and the team that are around you to transact, and you need to feel entrusted by that team. And there's no substitute. You can't substitute that. It could be the best deal ever, but if you don't feel confident in the package, you're never going to move on it. For us, I think our advantage is that we have got, we're building a lot of single family homes in the States, as you know, David. And like, if someone doesn't want to invest outside the US, we can offer the strongest options in the US. Like, we do have it. But for us, I was on a Zoom earlier to a customer that bought with us in Greece, and I said to her, like, for us, like, if we were relying on first time buyers as a business, we wouldn't make any money at all. So really, where we profit, where we make money is on referrals and repeat business. And so I think really, like, if I was coming fresh with yourself, Clark, and you were coming on board as a first time with us, it's like, it is a hard psychological barrier to overcome. And, for us, we recognize that. That's why we invest so much in our like content, magazine, education, because we think when people can sit in the bushes for 2 years and not pop up and ask any questions, but then once they feel comfortable, we're here. And so, we can't force people to look overseas if they're not quite ready. So for us, we invest a lot in the educational stuff. And from our side, like, I think relying on referrals and repeat business, it's a lot easier for me to mine sales when you've got, one buyer bought, sorry, 1 second. One buyer bought, then his friend buys and his other friends buy. So really for us, like, our motivation is doing a good job for someone that buys, and then they recommend friends and family after that. So I think, you're not going to overcome that objection for everybody. It might be, 1 in 10 maybe or whatever. But for us, like I say, when people do decide it's a yes decision from us, we just make sure we give them really good level of service. So then they do refer, because it's a lot easier for them for the friends to buy, what I mean? So I think
Matt, I love that. My personal motto for 2025 is who, not how, right? And so a lot of times people say, "Oh, I want to go invest abroad." Well, how do I do that? Like, how do I find the attorney? How do I find the developer that's got the track record? And it's right. Instead of saying that, it's like, who is the one that can help facilitate all that as a package to where I can have full confidence in the A to Z process. And to me, that I think anyone listening to this that's thinking about investing abroad is like, I need to go to find the expert that can handle all that for me, even if I'm paying full retail, because the risk is so diluted from that. Maybe you're not getting the best deal, but you're also not sitting in that country, in that town. And the risk is, and people would certainly rather take a full retail deal, but the risk is so much diluted versus like maybe a deal that has equity in it, but there's so much risk involved. As you grow and you get more sophisticated and you know the area better, maybe you take more risk at that time, but certainly then. So Matt, this has been really, really good, and I've just been kind of a listener and enjoyed being able to take the next steps with confidence. And I think that Dave and I talk about this all the time. We need confidence to be able to take the next step, right? And who can bring us that confidence and expedite that process? If anyone, for people that are listening that want to understand more about how to get in touch with you, how to learn your process, how to go see what you have available, what's the best way to get that education you were talking about, to get a hold of you personally?
Yeah, well, I'd say, our website, www.benoitproperties.com, we've got all of the, the magazine and collateral and the content on there. You can find our portfolio on there with the current options and projects that we've got. So by all means, subscribe to the newsletter. You'll get the different products coming through, the educational pieces coming through, and, just tune into it, because, there's not everything's going to suit everyone, but if you just tune into it and you sort of then feel more comfortable about the international markets, you can reach out to us, and we'd love to help you on that journey and help minimize the variables. We've already found the best rental managers, the best developers. We've already done it all. We've kissed a few frogs along the way as well, but we can offer value because we've already done that legwork.
Matt, golden hour. Anybody listening to this, I dare you not to have learned something in the last 60 minutes.
I'm glad I've been able to, like offer up some value and a bit of an opinion because I work hard all day, but sometimes I'm very rarely am I on these podcasts, so I feel
Yeah.
it should
Well,
be
I've known you for, as I say, 19 years. I know Fred the same amount of time. I know how credible you are. I know how seriously Fred takes due diligence. And I know how hard he looks at these developers. I know how he thinks. I know how deep he digs into these people prior to him putting anything out anywhere. And it is why we asked you guys to come on the show today and have this conversation, because I know a lot of people in this space, and you guys are the number one most credible group I know out there. And so we're going to put all of your contact details in our show notes, just below your listening app here. And so with that being said, Matt, I hope that anybody listening today who has even an inkling of interest in buying overseas, that they reach out to you, Matt Lavin at Benoit Properties. And thank you so much for your time, Matt.
No, brilliant. Thanks a lot, guys. And again, just thanks for inviting me on.
Thanks, Matt. Appreciate it. Talk soon.
Bye-bye.
Thank you so much for tuning into today's episode. Look, we truly appreciate your support and hope you found the conversation insightful and engaging and useful. If you enjoy the show, because there's a lot of shows out there, would you please take a moment to rate and review us on your favorite podcast platform? Your feedback helps us grow and reach more listeners. And if we reach more listeners, we will have bigger and more interesting guests. So don't miss the show. Please go ahead and subscribe so you don't miss the next episode. We hope you enjoyed today's show. Thank you so much.
You've been listening to the Burn Your Boats Wealth podcast with Clark Lunt and David Shaw. We would love to hear from you. Please reach out at contact@burnyourboatswealth.com with comments, questions, and if you have a topic you would like Clark and David to discuss on an upcoming episode. We would very much appreciate it if you took the time to rate and review Burn Your Boats on your favorite podcast listening app, and make sure to follow and share on social media. Content in Burn Your Boats Wealth podcast is for entertainment purposes only and is not legal or financial advice. Please review our legal disclaimer at burnyourboatswealth.com. Thank you and have a great day.